So the next prediction, when you think about Donald Trump, what exactly is the message here? Is he or Kamala Harris better for the economy? Which is worse, in your view?
Well, their economic policies are going to be very different. If you take at face value what Donald Trump says, he says, I'm going to impose tariffs of 10% to up to 20% on all imports in the United States. He wants to impose tariffs up to 60% on China. He wants to weaken the value of the dollar because he thinks it's overvalued and is leading to deindustrialization. He wants a looser monetary and credit policy. And the Center for Responsible Budget just 2 days ago said that this fiscal policy, including making permanent all the tax cuts, are going to cost us another $7.5 trillion over the next decade. Those of Harris, 3.5, both of them larger deficit, but certainly much larger. On top of it, he wants to restrict migration, and we know that migration in the U.S. has kept a limit on wage growth and has increased the supply of labor and maintained growth above average. So the combination of all these policies, currency, tariff, monetary, fiscal, and immigration, implies somehow higher inflation and somehow lower economic growth. In that sense, they would be stagflationary.
When I listen to his defense or Jason Trenner, Joe Livornia defending his policies, they say, look.
Scott Bessent, John Paulson.
Exactly. And there's a pretty long list. And they say, look, first of all, don't take what he says at face value, right? Which I guess is a little bit difficult. But they do say that if you drive up those tariffs, you'll have more onshoring of manufacturing, right? Also, if you get tax cuts, there's kind of a Laffer curve argument that we'll take that money that we didn't give to Uncle Sam and spend it out into the economy. They're basically saying they're going to push growth. Why don't you buy that?
Well, I don't buy that because, first of all, if you're going to impose tariffs, increases inflation. And if you're not going to import the goods from China because there are 60% tariffs, low value added or even medium value added labor intensive goods are going to go to Vietnam, they're going to go to Bangladesh, they're going to go to Turkey, to Mexico. The idea we're going to reshore low value added manufacturing in the US just doesn't make any sense. So it'll be just a transfer from China to somewhere else. It's true that he's making the argument that making the tax cuts permanent are going to help economic growth. He wants to massively deregulate the economy. And he wants actually to move away from a green transition to phasing out those IRA subsidies and going back to massive increases in fossil fuel production. He says 3 million barrels a day of more production over the next 4 years. But the reality is that deregulation doesn't have a very large impact on economic growth, maybe 5-10 basis points, but not more than that. We know that tariffs have a negative impact, especially if there's going to be a trade war. Harris wants to increase the corporate tax rate from 21 to 28%, but if it keeps it at 21 and we have budget deficits of an additional 7.4 trillion, bond yields are going to be higher, and that's going to crowd out economic growth. In some way, we have to start finding ways of either spending less or raising taxes. At least Harris has some ways of doing that. So that crowding out coming from lower tax rates is another important thing. So there are arguments he makes on why his policies are going to be pro-growth and lower inflation, but actually on net, if you take them together, currency, trade, immigration, monetary and fiscal, they would increase bond yields, they would reduce growth, and they would increase inflation.
Right. Well, let's build on that because, of course, when you lay out the Trump scenario, a Trump win, of course, you told Bloomberg News that you would recommend holding gold, short-term duration bonds, and tips as well. When you think about the potential Harris policies, and, of course, the polls are on a knife's edge right now, how different is the portfolio that you would structure?
Well, I would say that certainly if Trump were to be elected and inflation is going to be somewhat higher, bond yields are going to be higher also because deficits will be higher, and you don't want to be in long-duration fixed income. Both in 2021, 22, we saw when bond yields went higher, the price fell. You lost more money on 10-year Treasury in 22 than on S&P 500. Same thing happened last year in August, September. So in a world where bond yields are higher, you want to be away from long-duration fixed income. If you want still to maintain a defensive asset, it's not anymore long-duration bonds, but things that are going to be resilient to inflation, to the basement of fiat currency, to de-dollarization. And that's where short-term treasuries, tips and gold, and maybe some overexposure to some key commodity might be the right way to go. Now, if Harris were to be elected, the economic implication will be somehow different. I worry that regardless of Harris or Trump, that over the medium term, we have a number of negative aggregate supply shocks that are meaningful. deglobalization, reshoring, friendshoring, aging, restriction of migration, geopolitical conflict, climate change, pandemics, backlash against the liberal democracy. All these things tend to increase cost of production, reduce growth, and there are stagflation of the medium term. So some of my arguments are independent of whether Harris or Trump will be elected. It's a more medium-term argument why stagflationary pressure are going to be with us over the medium term.